Okay, everybody, welcome back to the Morning Edge. And so let's go and get started on the euro. So let's move the WizeTrade out of the way. One of the things I was sharing with the guys in the chat room on the WizeTrade alert too was I thought that the first initial support, okay, I marked that as, I think it's 732, which I marked. And really I was just looking in this area right here. You see that here? And so I think that the low was what, 734 or something like that. So it kind of moved off of that. But so even though we've been talking about this 716 for a long time, we know the significance here. We're looking for 716 as a pause before 758. We got to, what was it, 720, and then we saw a 35 pip pause, and then we rallied back. It couldn't take it out. Then we saw a more extended move. Well, then we finally got our move to the 758. It really hung around for a long time. And then we got this move above this 8, and we didn't think that it was going to really materialize to something much bigger at that time. And it didn't, although it held on like nobody's business. But at this point, I think the initial support, like I said, I'll stay with that, 732 and 692. Because you think, well, what happened to 716? Well, you have to see, look how many times it's been tested. So if it's going to come back to 716 again, it's going to go well beyond 716. So I'm going to say well beyond, but I would think we would come down here to 692. So we've got the 732 for initial, and then the next would be down to 692. We're looking here on the, right here in this move to 829, and from the low that was 339, so 643 would be the 38%. Look, the euro looks like it's overall bullish, but if we're going to get a more pronounced correction, that would probably ultimately take us to 643. We'll have to see what it's made of once we come down here and test things. Oh, hang on for a second. So we're going to come back with this again. So we're already here at the 732. So now I'm going to say, well, support's like 6 pips away. We were actually looking for that earlier when I was talking about it in Europe. So it did, bounce from that little area, not a whole lot. But we're going to go with support at 692. So let's go mark that up. And resistance, we'll call that right here. So let's take a look at this. There. $782. So just a second. So right there, 782, and we're going to go 692. We're coming into that area which I talked about. I was telling people in the chat area, the 732. But like I said, we've already come down here. We got as low as what, 33, and then we moved up. So if we're going to assault it, it looks like it wanted to press it a little bit, even lower. So that being said, I would go with the 692 and then the 782 for here. And let's take a look at cable. Just a moment. So we're going to go with support. We talked about this on Friday because we were given the big ranges. I'm going to go with, I'm going to stick with that, which was 24.15. It's because, like I said, the cable looks like it may, we may see him move back up here, but overall it looks like the cable will eventually move a little bit lower. And I think it would have to take out these lows here, and then you'd see the market move a little bit higher. So we're going to go with 24.15 on the support, which we had before, and we're going to go with resistance here at 25.63. I think that's what we may have already had before. Okay, no, 26. So let's go with 25.63. And let's take a look at the Aussie dollar. We had resistance at 77.31 and 77.85. For right now, for today, we're going to move the resistance right here. Right there. $76.87. So let's go and update that. And we'll go with support. We'll still stick with this area here, which is 75.84, right there. And let's go move into the Kiwi. Well, we talked about this being resistance, and it has held the market. You see the little line here. That was what, 73.24, 73.25. Yeah, 73. We're going to keep that because if it were to bust above it, forget it. Because look how many times they've challenged us. You see that? So if it's either going to hold or it's not going to hold. And support, we'll do, I think we have already marked that, 72.76. That's what I like for a short-term basis. We had 72.25 to give it a little extra room. That'd be way down here. For right now, because it's quiet day, I'm gonna go with this 72.75. Let's go and move into the dollar CAD. So we're actually clipping along pretty good. The dollar CAD, we had 29.32 and 30.90.70, 30.97. There's our 30.97. We're going to keep that, and I think we'll keep the 29.32 also, right here. We're stuck in a very tight range for right now. They could press them. Here's this 30.97. We're in a tight range, so I don't think a whole lot's going to happen. So I think we can still keep it here at 30.97 and 29.32. Just really not a whole lot. But we already had a pretty good fall. So basically just consolidating at this point. Obviously that's bearish. The others are bullish. Cable's not necessarily bullish anymore, so let's call that like in a range. And let's go to the dollar Swiss. And we had 98.92 and par of 4. There's where we get that par of 4. I think we're going to go and keep that. And I think, well, I guess we had this 98.92. Let's take a look. Yeah. Yeah, I think this 98.92 is still good for the short haul. We have the old bias pivot at 98.44, but for right now, we'll keep the set. Let's remove this. So on a very short haul, 98.92, we'll keep that as being support. I mean, obviously, if things were to break off, it doesn't mean that it won't, you want to buy them there at all, because it's in a downtrend, obviously. So, let me see this here. So you're thinking, well, I wonder if that means I buy them at 98.92. No. What it means is on a very short-term basis, because most of our trading is constructed towards short-term trading. It means that this would be an area of good support where if you were day trading it, and you come down here, or even if you're short, you could even look to peel off a little bit. Okay, that's all that means. And look, it's some decent support here. So it doesn't mean we won't get a decent bounce off. Obviously, they're struggling with this 99.58, but this would be the support. If you were playing it for the short side, and look, well, where's a good area? Well, you're probably going to get a good bounce here. So if you're trying to hang on for this 98.44, that's fine. But look how far you've already come back down here. That's where you'd probably get a more pronounced bounce off of this. So before we even got there, we may, come down here and get another bounce. You're thinking, wow, I should have gone and covered here. So, yeah, on the very short haul, we're going to like that 98.92, which is what we had before, and 99.58. So we'll take a look at how we stand here in the dollar yen. We had 12.53 and 13.60. See if there's any news. There's nothing out there. Euro fades in face of French election risks. Let's put a little bit of pressure on there. Hang on. And we do see the euro under pressure, you know, it's been under pressure actually through most of the session. So we'll just take a quick look on that. It's kind of setting the tone for the day. Okay, it just says the euro fell around 0.5% on Monday as concerns over French politics ahead of presidential elections set for April and May drew investors' focus back to a year of political risk to Europe's established order. The dollar was broadly steadier after a poor set of wages data on Friday quashed the speculation of a near-term rise in U.S. interest rates. Now, the Le Pen thing, that just aids, that just plays into the gold with the, you know, the geopolitical risks. Not to mention, the Fed's put on the back burner, it would appear, so that gives gold an extra little bit of juice. So that's what I'm saying, you have to take all these things. That's why it helps to know, when I look at the stories, I'm saying I want to see what the tone of the day is for the market. What are they kind of focusing on? Are they focusing on the glass half empty, which is how they're focusing on the euro today? In a relatively slow start to the week, the Aussie dollar was the biggest mover among the G10 major currencies. Let's see. That came as a bond market investor swapped French debt for the perceived safety of German, and in spite of a strong batch of German industrial data, which added signs to an improving Eurozone economy. I think there's just a load of positioning this morning, said Jane Foley, a strategist for Rabobank. There's been a lot of talk about the strong data in Europe, but the other backdrop is the politics. A few weeks ago, the market was convinced conservative presidential candidate Francois Fillon would win, and the certainty has evaporated. A source close to Fillon says he would launch a fight back later on Monday against a fake job scandal that has threatened to engulf his campaign. Polls showed the 62-year-old former prime minister has lost his status as a favorite to win the presidency to centrist Emmanuel Macron, and that the far-right leader Marine Le Pen, the chief risk for markets, has also gained. So that's kind of like what they're focusing on at this point, is the issue with Le Pen. So we'll get back once again to the charts here. So let's take a look at the dollar yen. We're looking at 1250 and 1360. 1253. We can see now we're below that. And we talked about this on Friday. We've been talking about this for a little while. This 11.99, which they almost got to it anyway, is 11.65. And our thoughts were, we're probably going to make it down here to this 11.65. That'll allow them to overshoot this 11.99. It just seems like I said, the way the market is set up. Also, don't forget the yen is a safe haven type currency. So we are getting concerns, as I said, now with Le Pen, you know, starting her bid, and the prohibitive favorite, the one that people thought that they felt that he had the best chance or was going to do okay, Francois Fillon. He's not, you know, obviously his support or lead has evaporated, which is, you know, concerning the market. So there's that risk. So when we look here at the dollar yen, just as we mentioned since last week, it just looks like somehow, some way they're going to make it down here to this 11.65, which would overshoot the 38%. The 38% of the move from 0.1117 to 1868. So let's see, better look here. Yeah, okay, because I was thinking, well, what about from way back here to 99? But this was a pretty good steep drop here. If you want to pull it all the way back from here, I guess we could, and by then we probably already hit the 38%. We'll take a look at that. This was the 99 and change. Oh, okay, the 38% with that of the overall gigantic move, and we'll do that, is 99.54, which would put us at 11.39. So because it came so close, we're going to give it the 1139, which is of the overall entire range, which probably most people would want to look at. Although this was a nice drop, if we're seeing a larger correction, they want to see it to encompass the entire range, which was this move all the way down to 9954, all the way up here to the 1868. That's a little bit higher here, though. But pull it down. There we go. That'd be 1136. Actually, this is 98.79. Let's see how far this pulls back. Oh, that's my error. See, because you have to look, this would be the entire move. So let's go in and go back. Which should be 1109 of the entire move, 98.79. Well, unless something really radically happens, I don't think we can get there anytime soon necessarily. So I still like this 1165 for a nice balance. So support we're going to say is 1165, and resistance will be right there, which is 1314. So 1165, 1314. I think we have to say on a short-term basis, we're definitely bearish. Okay, so it's time for a break, and we'll be back. But here we have the euro all the way to the dollar yen, and we actually have gold, but it's down here. So thanks for joining us here. We'll be right back.